Hello, beautiful people. How are you guys doing? I hope you all are having an amazing evening or morning or afternoon from wherever you're watching me from. Welcome to the Octa live trading session. My name is Ambrose Ebuka. And before I go on, to talk about the details of today's session, let me know in the chat if you guys can hear me clearly. Go ahead and let me know in the chat if you guys can hear me clearly. And if this is your first time, taking part in an Octa live trading session, you can also let me know in the chat as well. Super excited to be here today to talk to you guys about Forex, talk to you guys about my experiences and also get to know some of the currencies that you guys trade, your favorite currencies. We can, look at that and analyze that as well. In today's session, it's going to be an amazing one. You're going to learn some of the ways that you analyze the markets. Obviously, we'll have to look at the news first because that's how I trade. That's how I start my approach to the market. We'll look at the news and we'll look at some of the methods and the steps that I take before opening a trade and also exiting a trade as well. And if you have any questions in the course of this session, you can always ask your questions in the chat. Okay, the live chat is here for you to ask your questions. And I'll constantly check the live chat to see if you guys have any questions or the comments section as well. Okay. Quick disclaimer, guys. Any opinion, news, research, analysis, prices, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. All right, quick information or introduction of myself. My name is Ambrose Ebuka. I'm a 5 years trader. I've traded for half a decade now, and I've honed my trading proficiency to contrive various profitable stratagems that includes swing and scalp trading. While I go on to explain some of the details and the tools that we use, you'd get to understand the trading styles and which trader, which type of trader that you are. But again, half a decade experience, and I analyze gold, which is XAU USD, GBP JPY, and GBP USD charts with an outstanding accuracy exceeding 85%. And I also regularly backtest these pairs and these instruments because the market is always evolving. So you have to stay in the know. You have to always look at your strategies and see if there's some adjustments that needs to be made. Once again, if you're just joining, welcome to the live trading session with Octa. So we're going to look at the agenda for today. Let's look at some of the things that we are going to be discussing today. First, we're going to look at the economic calendar, and this is under the steps to trading. It's very important, okay? You want to know what's happening economically in different currencies. I know some of you would be like, well, I trade gold, I trade this, I trade GBP. Obviously, whatever it is you're trading is paired to another currency, right? So for example, if you're trading gold, it's paired to USD, it's paired to Euro, or even GBP. Same thing for GBP can be paired to USD, GBP can be paired to JPY, GBP can be paired to AUD. Okay, so it's very important that while you're looking at the technicals, you're also looking at the fundamentals and the economic stability or instability of these two different currencies. What do we do in the market? We look at the strength and weakness of currencies, and it gives us an idea of which one we want to buy and which one we want to sell. Basically, all right? Then I'll discuss with you guys the ZAP zone strategy. And this is a zone trading strategy that I use because I'm a zone trader. I just look at trading the zones in the market. We'll review the DXY currency or explain what it is for you guys so you can understand better, especially if you're trading pairs or currencies that are paired with USD. You need to understand the momentum and the structure of DXY, which is the dollar index. Okay, so stay with me to the end of this session, and I believe that by then you will not just know how to analyze the market, but you will also look at and identify some of the key areas where you might be missing out on your trading career. And finally, well, not finally, but after the DXY currency, we'll look at the correlation between the dollar index and other pairs, and I'll answer your questions if you have any. Very important, guys. We're here to learn, right? you're here to learn as well. So if you have any questions, please do well to ask in the chat. I'll constantly look at the charts to answer your question or the comment section. Okay, this session is going to last for about 45 minutes. And like I always say, use the YouTube live chat or the comment section to ask your questions during the webinar. I'll check them periodically and answer them all. All right, so I just told you guys about the ZAP zone strategy. I know that I said we're going to first check the economic calendar, but just an introduction to the strategy before we go over to the economic calendar. All right, I'm already seeing a question about analysis and trade setup. Beautiful question. I'll answer it once we're about to get into the charts. Okay, beautiful question, by the way. So concerning the strategy that I use and I'd also be using to analyze the market today, what does it consist of? First is the ZAP zone strategy, and it consists of your understanding of the market structure. All right, so this is away from checking the economic calendar. Once you're done with the economic calendar, just to get a directional bias, or just to give yourself, create that awareness of what has happened and what is to come. Now you come onto the charts, and you should be able to, at first glance, understand the market structure. Now, don't get me wrong. I'm not saying you should be able to, at first glance, know where to buy or sell. By market structure, I mean you should be able to understand if this is a trending market, if it's a ranging market. And you can do that just by looking at the charts. When we go over the charts, I'll show you guys what I mean by that. All right, so but first, you want to understand market structure, and you can understand market structure by using the candlestick charts. Okay, it's the most popular used charting type. And if you're a beginner trader and also intermediate trader, you also want to pay attention to patterns. Even at advanced levels of trading, we still use patterns to identify continuation of a trend or a potential reversal. These things are included in market structure. You want to be able to identify the trends, the range, and areas of major supply and demand. The second thing in the strategy is your ability to identify key levels. Okay, you can take a screenshot of this, but this video is also going to be in the Octa YouTube channel, so you can always come back here and watch it, and learn, relearn, and refine your strategy. Okay. Identify key levels. Now, what do I mean by key levels? Key levels are areas on your chart where price could make multiple tests. And when it tests double, or when it tests more than once, we call that a retest. Okay. We can identify these key levels with the moving average indicator, with trend lines, with the Fibonacci, with support and resistance lines as well, that you can also use to identify supply and demand zones. Okay. The third thing is to predetermine your entry and exit points. Now, some of you will be surprised. Why are we predetermining our entry and exit points before we trade? By identifying where you want to enter the trade and where you want to exit, you've eliminated a lot of things like emotions. You've settled and organized your risk, because knowing where you want to exit a trade goes both ways. You can exit in profit. You can also exit at minimal risk. But that awareness, that sense of awareness that you've created in your mind, takes away all the emotions that you would feel from that trade if it's going against you. Takes away all the rash decisions you could make from that trade, because now you're already able to perceive the market and see, this is where I want to enter this trade. And based on market conditions or market structure, this is where I'm looking to exit in my favor or exit at low risk if the market goes against me. So this is included in the strategy as well. And risk management, very important. Whenever I talk about risk management, it's something that cannot be overemphasized. It's very important for traders, especially beginner traders. You need to understand how to manage your risk. Okay, I know that sometimes you want to extend your hands a little bit, but very important for beginner traders. You wouldn't know how to manage your risk if you don't use it properly at your beginning stage, at your early trading career. Okay, if you just start with risking high amounts in percentage, then you're actually prolonging the learning curve. Okay, and you don't want to do that. You want to understand how to manage your risk. That way, you can know how to play around with your risk. All right, but important, learn how to manage your risk. It's like a baby, trying to learn how to run, but you want to start by walking. No, you start by crawling, and then you walk, and then you run. All right. Now, what kind of traders is this strategy suitable for? As you can see, we have all types of traders: the day traders, the swing traders, the scalpers, and the position trader. Why is this important for, or why is this suitable for all type of traders? You see, this is a zone trading strategy. Zone trading strategy. So at the end of the day, we're trading the zones. Now, you can find zones in daily time frame. You can find zones in 5-minute time frame, lower time frames. You can find zones in all these time frames, and that's why it's suitable for all types of traders. If you're trading the 5-minute time frame, you can find support and resistance there. If you're trading the monthly time frame, you can also find support and resistance in the monthly time frame as well. Now, when do you use this strategy? You use it during volatile sessions, and a volatile session can be an overlapping session. You can also use it after major news events, not during, but after, because after the event has been released, then you're able to spot areas of supply and demand. You're able to see the overall direction of the market. Okay, let me know in the chat if you guys understood the brief introduction to the ZAP zone strategy. Right about now, we're going to go straight to the trading session, the live trading session, and we'll go to the charts. But before we go to the charts, we'll look at the economic calendar, and I'll show you guys how you can use the Octa economic calendar to your advantage. All right. Let me know in the chat if you guys understood the introduction to the ZAP zone strategy. All right, guys, let me know in the chat if you guys can still hear me and see me. It's actually raining right now, so the connection is a bit unstable, but I think I was able to fix that. Let me know in the chat if you guys can see me and if you can hear me. Okay, so I was just saying that before we go over to the chart, we're going to look at the Octa economic calendar. And this is important because, like I said, if you missed out on the first introduction, I was telling you guys that the economic calendar is important because at the end of the day, you're trading currencies, right? It also extends to stocks. If you're trading stocks as well, or commodities like gold, you know, you need to know the strength and weakness of the economy of a particular country, especially if you're trading the currency of that country. If you're trading the US dollar, you're going to be looking at these reports from the US. If you're trading the US dollar against, let's say you're trading the US dollar against Japanese yen, which is USDJPY, you also need to look at the Japanese yen to see how is it going? Are we getting a decline in the economy? Is it unstable? What's the unemployment rate like? Just to get a sense of strength and weakness and gauge it. Which one is stronger? Which one is weaker? And obviously, when you gauge that, you're looking to buy the stronger one, right? And that's where technical analysis comes into play. So right about now, we're going to first look at the economic calendar. You can find that under analysis and education, and then you want to come down to economic calendar. All right. So if you're opening this calendar for the first time, some of the important settings that you would need to do is your time zone. First, you want to set it to your current time zone so that you don't miss out on, a report due to, your misunderstanding of the time zone. Okay, so you want to set it to the current time zone. And if you're a beginner trader, you want to also include low impact events, but just for you to get the knowledge, but they don't really bring about much volatility to the market. But just for the knowledge, you want to include that. I'll be sticking to the high impact events for now, and we can click on apply filter. Billion Australian dollars, right? Now, this is clearly a positive reading. And usually with the Australian trade balance, a positive reading suggests that exports outpaced imports. And this is considered bullish for the Australian dollar. Okay? Exports were more than imports. And a strong trade balance like this one, or a strong trade surplus like this, supports the Australian dollar, especially if you're going to be trading AUD. Now, one of the ways that you can understand the definition of this economic event would be to look at or click the economic event, and then you can come down here and you see that Octa has provided a definition, and Octa has also shown you that if you have a steady demand in the exchange of Australian exports, then it will turn out to be positive for the Australian economy and also positive for the Australian dollar. Now you have a sense of understanding that if I get a high reading, then this is going to be bullish for the Australian dollar. Okay, so if you're trading, let's say AUD USD, we've had a positive Australian trade balance, and this could lead to a positive or a bullish outlook for the Australian dollar. Stronger data like this usually strengthens the Australian dollar, especially against the US dollar, which obviously would be affected by data like the ADP, employment change, and the ISM services PMI as well. So if you're trading AUD USD, we're also going to go to the charts to look at that, but we're expecting some kind of bullish momentum on the Australian dollar in the coming weeks. We've also had speeches from the governor of the Reserve Bank of Australia, Mitchell Bullock, and usually speeches like this are important for traders generally from all the central banks, right? You can have speeches from the Federal Reserve, we can have speeches from the ECB, we can have speeches from the Reserve Bank of Australia like you have now, even the New Zealand Reserve Bank as well. And this is important because these speeches or the speakers are focused on some key areas that are important to you as a trader: the economy, the outlook of the economy, the monetary policy as well. They would discuss their stance on monetary policy. They would also explain some of the importance or emphasize on the importance of balancing the interest rate, because obviously they're trying to manage the inflation all along. Also, some global factors that would also be discussed as well. And by understanding this, you can get a bias on the direction of the domestic currency. In this case, that's going to be the Australian dollar. When we go to the chart, I'll show you guys how this report would affect or influence the Australian dollar. We've also had ADP employment change that would influence the US dollar. As you can see here, the ADP employment change is a gauge or a measurement. See that down here, a high reading is traditionally seen as bullish for the dollar, while a low reading as bearish. Now, if you look at it as regards to the US, all right, come down here as well, you'd see that a reading above 50 in the US dollar and a reading below 50 signals that the service sector is generally declining. Now, one of the things that you should focus on when you're trying to understand data from the economic calendar is you're not looking at the fundamentals in isolating or getting a general bias in direction from the fundamentals in isolation. You're just going to look at the ISM and say, this is the data, is below 50. Upwards, are we trending downwards? All right, let me know in the chat if you guys can see me and if you guys can hear me now. Khalid is saying the network is bad. When you start recording, explaining strategy, I hope it's live recorded. Yes, it is. I'm about to start recording and explaining the strategy now. So just confirm in the chat, guys, if you can hear me and if you can see me. All right, perfect. Okay, so we're looking at the dollar index, right? And I'm going to briefly explain what the dollar index is. The dollar index measures the value of the US dollar against a basket of 6 major foreign currencies. Now, guys, if at any point you can't hear me or you can't see me, please let me know in the chat. And if you have any questions regarding the strategy or you have a favorite pair that you want me to analyze, also let me know in the chat as well. All right. So these currencies this basket of 6 major currencies are the euro, the Japanese yen, the the Canadian dollar, the Swedish krona, the British pound, and the Swiss franc. Now, in simple terms, the dollar index, which is the DXY, just gives you an understanding of the strength and the weakness of the dollar. Now, we're looking at the chart right now. And remember, I told you guys that the ZAB zone strategy includes your understanding of market structure. And by that, I mean you should be able to come into the market and instantly identify if it's a trending market or a ranging market. Now, let me know in the chat if you know the direction of the dollar right now. Are we in a trending market? What trend is it? Or are we in a ranging market? Let me know in the chat. What's going on with dollar right now? What can you understand from the structure that the market is showing us right now? Are we trending? Are we ranging? If we're trending, are we trending upwards? Let me know in the chat. Okay. Guys, please confirm in the chat if you can hear me. Please confirm in the chat if you can hear me clearly. Okay, so thank you guys. Thank you guys for being patient. It's actually raining, so it's disrupting the connection, but I'm back. And again, thank you guys for sticking around. So the last question I asked was the direction, right? What direction? And I see Godfrey said downtrend, Alani said trending market downwards. Frank said USD is strong. How are we in? All right, guys, please confirm if you guys can hear me. Please let me know in the chat if you can hear me. And thank you again for waiting and staying patient. I told you guys that, I mean, for those of you that don't understand what trends are or ranges are, I told you that if you stay to the end of this video, you'd be able to understand what they are. And I'm fully committed to make sure that you get that knowledge. It's very important. If you come into the markets and you're not able to identify market structure at an instant glance, then you might need some extra work. Okay. If you said downtrend, because I see a lot of answers in the chat. So if you said downtrend, you're correct on the 4-hour time frame. Obviously, a downtrend is a structure that is made up of lower highs and lower lows. Okay, now what do we call the lower highs? Let me just take this out for you guys so that you can identify. I'm going to call this lower highs. And then we have the lower lows, which would be down here, right? Now, why do we call this the lower highs and the lower lows? If you look here, the market created a high and came here to create a low. And we see the market come up here to create another high that is lower than this previous high. Push back down to create another low that is lower than this previous low. Another high, but this high is lower than this previous high. When the market moves like this consecutively 2 or more times, we can call that a downtrend. So with that being said, if you look, this is similar to what's going on here. And you can see, you can almost spot the same pattern. Let's say, let me just zoom in a bit and show you guys. Consolidation, breakout, create a lower high, consolidation, breakout, create another lower high, as you can see. And now we're having another consolidation and another break to the downside. So if you look at these two images, you'd see that they are almost the same. And when you have consecutive lower highs and lower lows in the markets, you can call it a downtrend. Okay. Now for an uptrend, you're looking for the formation of higher highs and higher lows. You have something like this. So the same way that we have the lower highs and the lower lows, here we have the higher highs, the higher low, the higher high again, because this high is higher than this previous high. So we call it a higher high and a higher low. Or you can simply call all these areas that you see here, you could call them swing highs or swing lows. Why is it important that you understand patterns in the market? The Forex market generally just likes to move in patterns, okay? Respect key levels, respect patterns. One of the reasons would be that this is a market that is traded by humans, and oftentimes humans like to repeat the same action. All right. For example, if you purchased something at $5 and it increased to $10, if the value reduces to $5, there's a high chance that you'd buy it again at $5, right? Exactly. So you can see that the market likes to move in a pattern. So we're looking at a downtrend in the dollar index. Now, I know that some of you said the dollar is gaining strength, is gaining momentum and all that. Now, this is how you can kind of understand when the structure is beginning to change by key levels. You know, the first thing that I talked about was market structure, and then you want to identify key levels. Now, if you use the key levels that we've already indicated here, obviously what makes up a key level? We have your trend lines, your support and resistance lines, and you also have the moving average, keeping it simple and easy for you to understand. Now, downtrend. Obviously, if you want to understand the continuous strength, well, maybe not obvious for beginners, but if you want to understand the continuous strength of a trend, you want the trend to break the previous lows. That's for a downtrend. And you want to see the trend break the previous highs for an uptrend. Where is the most recent low for the dollar index? It's going to be around here. Now, if you want to get more confirmation on the strength, we're already seeing the market dancing around the key level down here, but we need this market to break below here and sustain that break, and then that would even give us more indication that the dollar is headed to make a retest at this key level down here, and that would indicate more bearish momentum for the dollar. On the flip side, if you're looking at the dollar index or the dollar itself gaining strength over the coming weeks, we can confirm that if we get first a break below this previous high. Just going to indicate that for you guys here. I'm going to have to take this off so it doesn't look messy. I'm going to take everything off. Okay. I believe you guys can see everything clearly now. All right. So we're still currently bearish, but if we see the dollar index break this previous high, sustain that break, and also break above this level, which is also going to be a break above this level, would be a break above our major level and also above the 200 period exponential moving average that we have up here. If we get that, if we get something like this, and then a consolidation, and a break to the top side, then we can prepare ourselves for a change in direction of the dollar index. All right, but as long as we are trading below the 200 period moving average, as long as we are making series of lower highs and lower lows, we are pretty much on a downtrend in the dollar index. And we've been following the dollar index for the past few months now. Obviously, we just kept, as you can see on the chart, we just kept breaking below all the key levels that we have, creating the same lower highs and lower lows as well. And when you see things like this, when you see the market create series of lower highs, the same patterns, you can see consolidation, break to the downside, consolidation, break, consolidation, another potential break to the downside. This is an indication of weakness in the dollar, all right? We're trading below the 200 moving average as well, still indication of weakness in the dollar index. We can only think of a strong dollar when we break above these key levels that I have just indicated right here. Now, if you're a psychological trader, and by psychological trader, I'm talking about chart psychology. Like if you focus on psych levels, the levels that you'd focus on would be 101.9 T. I'm going to keep this here all the way up to 102.50. So basically, these are the levels that you want to pay attention to for a change in direction of the, I'm just going to increase that bit. There's the green. These are the levels that you want to focus on if we're expecting a change in direction. We're currently bearish, but if I'm going to be buying the dollar anytime soon, or anytime at all, I want to see the market, the dollar market, break above this previous high, break above this key level. And this is a key level because we can trace it all the way back to previous times. Now, a break above this key level would also mean a break above the 200 period moving average. If we sustain that break, then I can start to adjust my trades for a reversal in the dollar index. Because obviously, these are areas that would come to make retest at if we get a break above this point. But currently on the dollar, if you're trading GBP USD, you should still be looking at shorting the dollar as we speak. Remember, guys, we have NFP coming in tomorrow. And one of the things that you should do when you have economic events coming ahead is you want to prepare yourself. Okay, for a major event like the NFP, you don't want to, I mean, if you're in profit, it will be a good time to put your stop loss into profit or secure some profits, you know, kind of prepare yourself for the volatile move that the dollar would make, because we're expecting volatility, high volatility tomorrow when the NFP is being released. And even in the coming months, right, we're gearing towards the election period in the US. Most of these events are going to bring about volatility as we get towards that time. So if you have open trades that open trades with instruments that are paired with the dollar, please adjust your positions accordingly ahead of tomorrow's NFP. So let me know in the chat, guys, if you have favorite pairs that you'd want me to analyze. We can look at one, and I'll give you guys my direction on that pair. Okay, gold. Well, guys, gold is a bit tricky right now, dating, but tricky in the sense that we just if I go to the lower time frame, let me go to the 15-minute time frame. You can see that gold is currently consolidating. If you look at recent price action, I think everybody just loves gold because someone else also recommended I check gold as well. Let's give that a minute, guys. Okay. So currently, we're not getting any clear trend on gold right now. Obviously, because let's go back to the 4-hour briefly. You see that we just pushed out of, gold currently got to its all-time high, broke out and started consolidating at this point, creating series of highs and lows, bouncing off of support and resistance. Now, usually when the market acts like this, thing is certain. In fact, the more the market consolidates, the greater the breakout expectation. When you have the market moving in something that we can call an apex, something like this, and you see the market just consolidating, there is a greater chance, the more this consolidation continues, the greater the breakout would potentially be. And this also goes for a rectangle pattern as well. That's not good. Yes. And the breakouts can be to either direction, right? Currently, we are seeing, we're expecting continuous bullish momentum on gold as we're also gearing towards the election period. Gold is going to serve as a safe haven for investors. It's expected to. So we're pretty much still bullish. Technically, if you look at the charts, you still see that we're trading above the 200 period moving average. Solid trade and trend above because we're seeing multiple bounces at the 200 period moving average. So we're still pretty much bullish on gold right now. A clear confirmation would be if we can break above these highs. Guys, if you're able to break above these highs on gold, 2525, let me just indicate that. If you're able to have a sustained break above this, then guys, gold is flying. Usually, when the market makes a multiple retest at a particular level, it makes it strong. And if it eventually breaks through that level, you'd have a massive move before you get a retracement. And that's something that you can capitalize on. But right now, gold is just currently trading in the middle. You don't want to be in that kind of trade. If you look at the most recent candlesticks, let's bring this down. All right. So if you look at the most recent candlesticks on gold, you'd see that that bullish momentum that we had that took us up here is getting contested at this point, right? We're seeing the formation of a doji candlestick, and obviously you would know that dojis are indecision candlesticks. Neither the buyers or the sellers are able to take advantage of this candlestick. At this point, you see the bullish momentum is beginning to slow down. So this is not a good time to either buy or sell. We want to pay attention to this level that I've indicated up here, and also the 2475 level as well, which is going to be just below. It's going to serve as our most recent support down here. Yes. All right. So let me know if you guys understand the analysis on gold. Now, a push to the downside would also serve as a retest on the 200 period moving average. This current 200 period moving average on the 4-hour time frame, as you can see, let me just zoom in a bit and show you guys something. A move to the downside would mean that gold is going down for another potential retest on this 200 period moving average. Now, usually, if we get a bounce and we see bullish momentum, we go long, right? If we get a break at this key level, this is what we call, or what I like to call, a stipulation or a confluence, because now we have the 200 period moving average also aligning with our major level at this point. If we get a bounce, it's going to be a really good one that takes us all the way up. If we get a break, it's also going to be solid. And a solid break or a sustained break would mean that we're coming down to retest these levels. All right. So currently, this is what I want you guys to look out for on gold. These are the levels that. All right. Let me know in the chat if you guys can hear me, please. So if you're going to be trading NFP tomorrow, this is a quick tip for you. Very important. I'll keep that in mind. Here's how to use fundamental analysis in trading. First, you want to look out for the events for the week, the day. I would recommend the week because you have a broader view of what to expect. Your focus should be on high impact events and understand the meaning of the event, confirm the release time, understand the meaning of the event and the possible outcome. If you get a higher reading, what does it mean for the currency? If we get a lower reading, what does it mean for the currency? Also, very important that you take note of the previous reading and the forecast. These are important data that you want to focus on, not just the forecast, but also the previous, right? So that you don't get, conflicted analysis with higher than forecast, but lesser than previous, something like that. Your understanding should be actual versus the previous. Okay, so take note of that. Wait for the news to be released. Now, I know that we like the fast-paced style of trading. You want to trade as the market is moving, but the reason I'm recommending that you wait for the news to be released is so that you're more comfortable and you understand the direction of the market. And now you want to combine this with your key levels and market structure that you've understood from the strategy. Guys, there's a link in the description that you can use to download the Octa trading app. The link is in the description. You can use that to start trading. The trading app offers a wide range of trading instruments with low spreads, fast execution, and zero commissions. Now, you can create an Octa Trader account. Recommended because you get access to Space. Space is a feature with Octa where you get to receive trading insights, analysis from experts that can improve your trading career, and also some extra features that have been added to Octa Trader. So when you create your account or when you download the Octa Trading app, you want to create an Octa Trader account. And if you're making a live deposit or if you're trading live and you want to make a deposit, you can take advantage of this promo code, Ambrose E100. The promo code gives you a 100% bonus on your deposit. And remember, your deposits should be made with the official website or the Octa Trading app, not outside of that. When you make a deposit, you can go to the promo code section in the menu. It's in the navigation button right there. You can enter Ambrose E100 and activate your bonus. Now, there's an information that shows you how the volume that you need to trade to be able to redeem your bonus to your trading account or your bank account, whichever one you prefer. Make a deposit and enjoy the 100% bonus using the promo code Ambrose E100. A quick summary for what we've talked about today. We've discussed the Zabzone strategy. I mean, we had a little bit of, disconnections because of the rain, but again, guys, you can come back to this video and rewatch. If you have any questions, you can always ask in the comments and we'll answer your questions, no problems. We looked at the sustainability and the suitability of this Zabzone strategy for traders. We talked about news trading. Remember, NFPs tomorrow. Keep your trade, if you have open trades, keep them adjusted so you don't fall into victim of the volatility of the market. And we have reviewed the strategy on a live chart. We looked at the dollar index and also we looked at the possibility of gold breaking out to the top side or to the downside. We looked at some of the key levels that gold would potentially break out from. What are some of the key takeaways that you got from this session? You're able to analyze trading instruments and understand how they behave under various market conditions. I told you guys that if you're able to stay to the end, you'd understand the difference between the trending market, the types of trends that we have, and a ranging market as well. Again, you can always come back to this video and watch, and if you have questions, I'll be in the comments. Review your actions and reflect on your decisions to identify what worked well and what can be improved. All right, you want to create that vacuum for continuous knowledge. It's an evolving market, so you want to always learn. Keep up with the latest market news and updates. You can do this by downloading the Octa Trading app with the description or the link in the description and create an account so you can get information and updates on analysis and also different dynamics in economies of different countries. You can use the educational resources like the webinars, the live trading sessions to enhance your understanding of trading strategies and tools, and this can help you improve your trading abilities. If you have any questions, please let me know in the chat. And I can take one question before I go. Let me know in the chat. And while you do that, please give a feedback of today's session. You can scan the QR code or you can check in the link in the description. There's a link in the description that you can use to give a feedback for today's session. It's going to take only 1 minute of your time. All right, guys, in the absence of any other questions, thank you so much, guys. We had a shaky live trading sessions. Apologies. The next one is going to be amazing. We're going to look at the Octa Trader app and other features as well. Thank you so much.